It's typical. Most people think of balloons, party balloons, when you talk about helium. But the industrial countries, they thrive on helium, particularly in the manufacturing process. So probably one of the most significant developments from a demand perspective is the United States is now attracting semiconductor manufacturers to move to the United States so we can be independent on these semiconductor chips.
Everybody, welcome to the Angel Research Podcast. I'm your host, Jason Stutman, and we are here as usual today to discuss the market's hottest stock stories and investment opportunities. Today we're going to be talking about a resource that I think most investors generally don't consider, and that resource is helium. I think when most people think about helium, they think about maybe birthday balloons and high-pitched voices, but helium is actually a critical resource for a lot of the products and the industries that we rely on today. Today we have Robert Price on the show to kind of walk us through this conversation. Robert is the CEO of Total Helium, which is a helium exploration, production, and storage company with some key assets in Kansas, correct?
Yes.
Okay. Quick disclaimer, nothing that we say here is personal advice. We can give you the tools and the insights that you need to make great investment decisions, but we can't make those decisions for you. Also, like and subscribe to the video and comment as well. With all that out of the way, Robert, welcome to the show.
Well, Jason, it's a pleasure to be here, and thanks for inviting me here to Angel Pub. Appreciate it.
It's good to have you out here. Did you travel? You flew?
I did. Our offices are based out of Denver, Colorado. Our main area is Kansas, but we're in several states.
Okay. Let's start off, and you could kind of maybe give us a little bit of background about yourself. I know that you've been in this in the resource industry for many years, maybe as long as I've been alive. So maybe you could just kind of like tell us how you got into the resource space early on, and then maybe like walk us up to the creation of Total Helium, and we can kick off the conversation from there.
Yeah. So my background started in the early 90s in exploration. We were drilling wells in the Mid-Continent area. We expanded into the Williston Basin too. My other part of my career is I purchased manufacturing facilities. We made natural gas compressors called S&R compression. I also owned a automotive supplier. We supplied all of Ford Motor Company's North American automotive glass. We had about 1,200 employees. So I've been involved in primarily manufacturing, but the passion of my life, of course, my family, but in addition to that is oil and gas exploration, and particularly helium exploration.
Okay. When did you kind of get into helium exploration?
Well, it was a few years ago. We were looking in the area of the Hugoton Basin. That is in Kansas, Panhandle of Oklahoma, and into Texas. Back in the early 1920s, there was a discovery of both natural gas and helium. It is the largest natural gas and helium field in North America. It supplied the world's supply of helium for almost a century. The major oil and gas companies owned the fields in and around that area, and as they were expanding the field, they started encountering, they had probably three main challenges as they were expanding the field. First of all, they started encountering more water. When you have more water, when you're producing natural gas and helium, there's additional costs. First of all,
because you have to dispose it, correct?
You have to dispose of it, and since the past several decades, technologies have changed with both disposal and moving water, being able to have submersible pumps or rod pumps at the surface that are very large. That was one of the challenges. Also, an additional challenge is the gas composition as you start coming up dip, the area that we're in. It's about 60% methane. 30+% nitrogen. So if you can imagine, they weren't paid much for their natural gas. And with the ebbs and flows of the oil and gas industry, At sometimes they were only getting less than $1 an MCF. So they didn't have the incentive to continue to drill. And probably the most important factor is they were not being paid for their helium. Helium was considered a byproduct of methane, of natural gas. And so when I decided to move forward with this project and exploit this truly massive resource, I wanted to make sure, first of all, we were getting paid for the helium.
Sure.
And so when I started the leasing program, it was actually during the pandemic. We had a team of landmen in western Kansas dealing with farmers and ranchers. Buying oil and gas leases takes patience. And it was actually a good time working with these farmers and ranchers to acquire this 115,000-acre lease block.
Sure. Why weren't the bigger gas companies monetizing that helium? Is that just because it's kind of like they're so big that it's kind of like a drop in the bucket for them, or was it just because they didn't have the know-how or the capability to do it?
Yeah, the United States government got in the helium business during World War I.
Yeah.
If you can imagine sending up balloons to potentially bomb your adversaries, that was actually high tech back then. And so even today, if you have a federal lease, you have to get a special exception from the United States government to be able to produce the helium.
Okay.
And so they were in the business, and some of the producers didn't have the processing facilities. But again, it was just it was considered a byproduct.
Okay. I want to get back to some of this later, but let's just back up a bit. And could you maybe lay out like a broad background of the helium market in general for our audience? And we could kind of like, maybe we'll touch on demand first, then hit on supply, and then maybe we could hit on storage.
Yeah.
So in context of demand, which industries are driving most demand for helium right now? And then maybe which regions of the world are pushing most of that demand?
Well, it's typical. Most people think of balloons, party balloons, when you talk about helium. But the in industrial countries, they thrive on helium, particularly in the manufacturing process.
Yeah.
So probably one of the most significant developments from a demand perspective is the United States is now attracting semiconductor manufacturers to move to the United States so we can be independent on these semiconductor chips. The United States Congress, the Senate just passed a bipartisan act to spend $50-some billion to attract these companies. Mm-hmm. And so if you're an industrial gas company and you are selling products, this helium, to the semiconductor industry, if you tell them that, well, I'm going to get my helium from Russia, or I'm going to get my helium from Qatar, and there's a long logistical way to get it here, you're not going to be that competitive.
Sure.
Because they want to have the helium, a domestic supply of helium, here in the United States on demand if they're spending tens of billions of dollars on these plants. So to answer your question, Jason, that's the biggest driver. Now, of course, the aerospace industry and other industries use helium as well.
Okay. Could you speak at all to what exactly helium is used for? Is it similar to like neon, where it's used for like the lasering, or?
Exactly. I mean, it's very similar in the space program. It's used to purge the systems before you put the other gases in.
Okay.
But pretty simple. Yes.
Okay. On the supply side, where is most of the supply coming from at this moment?
Well, hopefully the supplies be coming from us, Jason.
Okay.
I mean, that's truly our goal, is to open up this massive helium discovery. But the industry was hopeful that much of the supply was coming from Qatar and from Russia. And we all know what's going on with the Ukrainian war and those disruptions. So there is a push to make sure that we have domestic supply. So where do you find helium? Where the biggest field in the world has been.
Sure.
And that's here in Kansas.
Okay. Can you tell us a little bit about the federal helium reserve or the history of that? So my understanding is there used to be a federal helium reserve, and there was some kind of, I guess, act of Congress or some kind of legislation that has been winding that down over time.
Yes.
What's the status of that now? Can you give us some context there?
Yeah, it is being wound down. The helium that's in the reserve has already been pre-sold at auction. So the industrial gas companies, they own that helium.
Okay, so it's essentially empty for all intents and purposes.
For all intents and purposes, and there's questions whether or not it will actually eventually be auctioned off or just shut down and shuttered.
Gotcha. Okay.
And can I?
Yeah, go on.
I want to share what we are doing, and I want to step back just for a second, Jason. When we were acquiring our oil and gas leases, I funded the lease acquisition. I put in several $1 million to fund the leases in Kansas. I wanted to make sure that we were actually paid for our helium. And so I entered into an agreement with Linde. Linde is a $150 billion market cap industrial gas company worldwide. They started helping us fund our project. They put in $950,000. They put in another $950,000. They pay us on a monthly basis as we expand our field.
Sure.
And so, but I'm going back to your question, Jason.
Yep.
What is so key, not only for us but for Linde, with the storage facility being potentially shut down, we are developing our own storage field.
Gotcha.
And we're in the process of permitting. We've done all the geological work, all the engineering work, and right now we're 50-50 partners with Linde on that. Again, you want to make sure that when you are talking to the space program, when you're talking with the semiconductors and supplying them, even MRI machines require a certain amount of helium for cooling properties.
Yep.
You want to make sure that you can say, we have a dependable supply on demand for your businesses. And that's why what we're doing is we are putting in a helium storage facility in and around the infrastructure near Linde's liquefaction plant.
Okay, I'm going to ask you a little bit more about the Linde
please.
partnership later. Real quick, the helium market over the years has been plagued with shortages.
Yes.
I kind of in my preliminary research for this podcast, I was basically people are saying that we're like entering shortage number 4.0. I don't know if you think that it's worth like getting into all the previous shortages, but my question is, why is there so much turmoil, or has there been so much turmoil in the helium market so far? Is this like basically a string of bad luck, or is there something inherently tricky about storing and producing helium that has kind of gotten us to that point?
Yeah. I would say that, first of all, you have to drill a well for it. And generally, it's in very small quantities. Mm-hmm. So our gas composition, it is 0.6%. But if you look at natural gas, and we're receiving right now $8 an MCF for our natural gas,
what's an MCF, just to educate anybody?
Million cubic feet. Cubic feet. It's a measuring, but it's traditionally natural gas has been around $1 to $3 an MCF, maybe $4. What we've seen recently with the Ukrainian war is it's now $8 an MCF. And so I want to can I share with you just a little bit about the numbers?
Yeah, of course.
Okay, the numbers are, our well, if it produces 300 MCF a day, we have 60% methane. At $8 an MCF, that's about $45,000 a month. We also have liquids, propanes and other natural gas liquids. We have 3 gallons per million. And if you do the math on that, at an average cost of 88 cents a gallon, that's another $22,000, $23,000 a month. And then the helium component, Jason.
You're talking per well, correct?
Per well, per month. And then the helium component, right now, we're receiving $212 per MCF, which is a very high price for helium. But because of the shortage that you just brought up, Jason, There is spot market that people are paying between $1,000 and $1,500 per MCF for helium. And so there is a desperate need. If you want a party balloon, good luck.
Yeah.
Because it's very tough to get party balloons and other things.
Well, so this is something that I was reading a couple of weeks ago about helium was that, there is such a shortage that people literally are having a hard time filling up a party balloon.
Yep.
And even, I think it's helium. I'm not 100% sure. You could let me know. But that PhD students at Harvard were basically having to change their thesis because they weren't able to use the scientific instruments that they needed. So that is, I think that kind of speaks to the level of shortage.
Just have them call us, Jason.
Okay, sure. Hey, if you need helium, you guys know where to go.
But on just a one well basis, we can at a lower price of $212 an MCF for the helium with the methane, with the liquids. Just one well can generate over $80,000 a month on one well at very minimal rates.
Sure.
When we originally started this project, our competent person said we would do 1,000 MCF a day. Well, right now we have produced 300 MCF a day, and that is at that minor amount. But if we had a higher price for helium, with a higher production rate, and we're figuring this thing out on this massive discovery. We are figuring it out. The numbers are, to me, shocking because we have over 200 wells that we can drill, and we have more ability to get additional leases.
Okay, so I'm going to ask you a little bit more about it's the Helisium Project, right, in the Yucatan Basin? Okay. I want some details on it. How much land? How long is the lease? How much helium there do you have in general or estimated? And then maybe what do you estimate at this moment to be the total value of the reserves? I know you said you're still figuring it out, but answer those questions as best you can.
Yeah. Well, first of all, when we started the program, it's buying oil and gas leases in Kansas from farmers and ranchers, which I'll say it again, they're a great group of people to work with. They've been so supportive of us. We buy the oil and gas leases. The term of the leases, it will have at least 5 to 15 years to develop the asset.
Okay.
So we have plenty of time and plenty of term on the oil and gas leases. We leased up to 115,000 acres, which, Jason, that is a lot of land. And we can drill one well per 640 acres. We'll probably be able to drill 2 wells per 640 acres. As I mentioned, assuming we have sustained rates at 300 MCF a day, at the current pricing, and again, we may be able to get much better pricing on the helium. That's under $1 million per well, and we have 200 of those wells, and then we have running room to move beyond.
How many wells do you have online currently?
2 wells.
2 wells, and what's the any rough timeline in a year? How many wells are you going to have in 2 years? How many wells are you going to have?
Well, what we're doing right now, we are being very methodical about how we exploit this resource. The very first well we drilled, what we did is there are 6 horizons. We went to the very lowest horizon and we stimulated it, and we tested that. It has a fair amount of water, and so we go through what we call a dewatering process. So as we bring more water out, the gas rate increases.
Okay.
And so we did that first, and then we went up and we learned that when we stimulate this, it doesn't go into those other 5 zones. So we went back and stimulated those zones on our first well. That well is the furthest south on our acreage block. We went 20 miles north for our second well. And we did the same thing. We stimulated the first one. That well was producing 300 MCF a day. We put it into the pipeline. We had 50-pound back pressure on it, so it was producing 180 MCF a day. And then the learnings from the first well led us to the second well because we only opened up 2 of the zones in the second well, and we were getting 300 MCF a day with the back pressure 180, and then we just stimulated all the other zones.
Okay.
And now we are waiting for the results. We're producing it. From when the stimulation, we have sand, so a little bit of sand came in the wellbore. That's cleaning up. We should know pretty quick, and it's truly it's pretty impactful, not only for our little company, but to our industrial gas company too.
Sure.
It's very impactful because we are selling into the pipeline. It's going into a plant. They're breaking out the liquids, the LNGs, and then they are delivering the helium to our industrial gas partner.
Okay. Speaking of your industrial partner, can you tell us a little bit more about Linde, that partnership? I know you said earlier it was a 50-50. I know you said that they're they're paying you on the regular. I know there were some consulting fees involved. There's also some they have a right to purchase at a specific amount. Could you give us as much detail as you can?
Absolutely. So the 50-50, that's just on the gas storage.
Okay.
And so we're advancing the gas storage.
Yep.
That's separate. Again, they put in, when I was funding this 100% myself, I wanted to, and Jason, I didn't know if we'd actually be a public company. We were thinking of going down the private route. And that's when I brought in private investment from Linde, where they put the $950,000 in, another $950,000 in. And then we decided to go down the public route, which gave us a little bit more access to capital. And then we were able to drill additional wells. We have resources in the bank, cash,
Yep.
to drill more wells. But what we're doing is we are being very methodical how we exploit this resource. One well to the south, one well to the north, open up one zone, open up the other zones, and get a really good amount. Now, we're also doing a study to do a horizontal drilling program. So we want to make sure that these wells are cash flowing, producing, and then we'll make the determination, do we do other vertical well bores, or do we do a horizontal well where we can significantly increase the rates that we've already discovered?
And what exactly are you looking for in these study results? Like what information tells you whether or not you should continue with a horizontal well or whether or not you should continue with another well?
That's a great question. So we have these 6 zones.
Mm-hmm.
We stimulated this one, and we thought the stimulation went up to these other zones. Well, we found out, we put in tracers to verify whether or not it has gone up or down. We found out it didn't. So the question is, if we did one stimulation here, and you have to stimulate it for it to produce. You stimulate it here.
And is the stimulation just draining the water you were saying, or what is this?
The gas, the helium, and the water.
Okay.
Yeah. So what it does is we pump sand in.
Okay.
And open up the rock, so it creates kind of a reservoir or a void that all the water and all the gas come in. So the question is, to your question, you have these 6 zones. We did this, and it didn't migrate up. So we had to come back in. We have our wellbore, and we perforate, we stimulate here, then we come up and perforate here and perforate here. Well, the question is, on the horizontal drilling, if we go down and over like this, if we stimulate here, does the stimulation go up? Does the stimulation go down? Our study says it will. It will. So we are, again, very methodically, and I just to share an analogy with you, this is a deep watering play. So it's been proven over and over again in the oil and gas industry. You take the water out, it reduces the pressure, the gas rate kicks up.
Gotcha.
And over again, proven. But it is an application, and when the shale industry, where they had multi-stage fracking, when that was first developed, you had certain learnings from that. We have certain learnings, and our learnings are just really positive right now as far as what our trajectory is.
All right. Well, that's good news to hear. I have a personal curiosity here. The storage unit. It's underground.
Yes.
Why do you guys store underground?
The cost.
Just cost?
Yeah. We will be storing between 0.2 and 0.4 of a BCF. It would be totally non-economic to try to build tanks that big. So
so you're using the Earth as like a natural tank.
Exactly.
Okay, that's okay.
And can I share just some of the science behind it, Jason?
I would love to hear it.
It is fascinating. So what you have is this very thick zone of salt, pure salt, and it's embedded salt, so it's impermeable. It is very solid. The U.S. Strategic Reserve in the Gulf Coast, that's where that oil is stored. How do you create a cavern within that? You pump fresh water down the wellbore, and then it slowly starts dissolving it away. And then you create this cavern, but it is a beautiful seal. What the Bureau of Land Management, the U.S. government's doing, not a perfect seal. What this will do is this will create the element is so small.
Yeah.
I mean, hydrogen, then helium. And it likes, and that's one reason there's a shortage. It likes to escape.
Yep.
It likes to get out of the ground. Yeah.
Yeah, so that's actually really interesting because I think that I at least think of whenever I hear a reserve, I think that there's tanks sitting underground, but that actually makes more sense. And I mean, especially from an economical perspective.
Yeah.
All right. I'm going to ask you a question. I'm not sure if you could even comment on this, but some analysts are speculating on potential buyout with Linde. Is that something you would ever consider? And if so, how do you determine what's best for your shareholders in that case?
Well, so we look at how to create the best value for our shareholders, and we have everything's on the table for potential increasing shareholder value. I can't speak specific to that question, but let it be known we don't have any stone unturned.
Fair enough. On the side of the water disposal, is there any competition that you guys are facing where you guys have an edge over? What is the edge that Total Helium has over other helium producers?
Well, first of all, we're in a region that is producing helium.
Yeah.
We're in the middle of the infrastructure. So in order for us to have a well, you need three main infrastructures. Let me talk about as far as competition, what other people are doing. There's some people in Saskatchewan and Canada. There's some people in Arizona. There's New Mexico. There's other people producing Wyoming. Actually, ExxonMobil has 20% of the world's supply of helium from a field in Wyoming. And so there are other people producing. As far as Total Helium in our area from the dewatering play, we need three things. First of all, to your question, we need a disposal well because we are moving a fair amount of water. So we need to bring the water to the surface and then inject it in a disposal zone safely. Okay. So that's the first thing. So we drill disposal well. Our producing wells, we drill down to about 3,000 feet as we produce this. The disposal well is about 6,000 feet, so we put it in a whole different horizon. So first of all, we need a disposal well. That's a really important part of the infrastructure. Second of all, we need three-phase power. If you're out in the middle of Arizona or some western place, you may not necessarily have the power. You certainly don't have the disposal zone. We're blessed with a really good disposal zone where we're from, where we're producing.
What makes it so good as a disposal zone?
It takes it on a vacuum.
Okay.
So it sucks, for lack of a better word. It just, and you don't need to have energy to put it down. You just hook it up and it takes it all. And there's plenty of availability. But not only the disposal, but you need three-phase power. What we do is we will run a submersible downhole pump. So the motor is downhole, and you have electrical wires that go down, and we move this water out really quickly to dewater it to increase the gas. And then probably one of the most important things is the infrastructure. Jason, we are literally already selling our methane, our helium into the pipeline, and we're getting paid. We're getting paid for it, and it's just being in the middle of the infrastructure where the plants to take the liquids out and then the liquefaction of the helium, that is key. And that's what really
moves
our economics here.
What does that transport situation look like? Like from the moment it leaves the well to the moment it gets in the pipeline? It goes directly into the pipeline?
Absolutely.
Okay.
Absolutely. Wow. We build our own midstream pipelines to get into the plant's pipelines.
Okay. Before we wrap up, just want to ask about Helium's financial situation real quick. Maybe you could give the audience some insight on how much cash you have on hand or last reported, how much runway you have, and if you're currently profitable or not, and if you're not, then what the kind of time horizon on that is.
Okay, those are great questions. First of all, we're making money on our wells, which is a good thing. We just released our annual report. We raised $10 million. We got $6 million left in the bank. As of March, so we've been trying to be very frugal with our resources, and then we have other streams of revenue not only coming in from Linde, but our wells too. So for a company that is 8 months old,
I was really surprised. I was really surprised to learn that. I figured you guys had been around for a while, but when I was reading a research report, and it was saying that you guys had only been around for like 6 months at the time of it, and I thought that's crazy.
But again, I invested millions of my own money in buying all these leases, and I worked on it for 2.5 years before we became public.
Fair. Okay, Robert, I want to thank you for coming on the show. I kind of want to give you some room to maybe if you think we didn't mention anything, if you want to plug something. I know that you have a conference coming up in Denver. Is it in August next month?
No, it's actually next Tuesday. It's called Intercom.
Okay.
It is. I'd say we are by far the smallest company speaking at Intercom.
Okay.
This is where.
What are you guys valued at right now?
It's about U.S. about $30 million.
Okay, so you guys are still tiny.
Yeah. But at Intercom, it's where the world's oil and gas financial community all meet in one place. They've been doing it in Denver, Colorado for the past 25 years. We'll be presenting. We are by far the smallest company presenting. It's mostly multi-billion-dollar companies that are presenting. And what's really a pleasure for me is to be able to share what we're doing with our oil and gas colleagues.
Yep.
And then the private equity and all the larger investors, they can appreciate what we're doing. We're onto something, Jason.
Okay.
And we're really close to it.
Are you going to be presenting personally
Absolutely.
there? Okay.
Absolutely.
Is there going to be a deck or something? Maybe we can, we can put a link in the description.
Yes, absolutely.
Okay.
Yep.
Okay, cool. Robert, thanks.
Jason, you're awesome, man.
Thanks for coming on the show.
This was great.
Yeah.
Thanks a lot.
It's been great to have you here. For everyone who's watching, if you like the content, click the like button. If you're watching this video still and you haven't subscribed yet, please subscribe. And if you want to see more of these videos, more of these interviews with companies like Total Helium, then just leave a comment and let us know, and we'll see you next time.
Awesome.
Robert, thanks again.
Okay, see ya.